Angie's List has been acquired by the parent of HomeAdvisor. This is a story that really has been years in the making, and joining us with perspective is University of Indianapolis Associate Professor of Finance, Matt Will. What was your initial reaction upon hearing of the deal?
Well, I was kind of wondering why it took so long. I mean, Angie's List is a company that was designed to be taken over. It's never been profitable. There was never a forecast of profitability, a quarter here and there. But basically, it was all about acquiring members and monetizing those members. And we knew that Angie's List wasn't really the entity to monetize that. It had to be someone else. And so when they passed up the deal in 2015, it was just a matter of time. I thought they should have taken the deal then, and I'm glad they're taking the deal now. It's the right thing to do.
So what was your thought on the price, as far as the price per share? It seemed relatively close, if not a little bit lower than that initial offer.
Yeah, it was a few cents below the initial offer from 2015. But what surprised me is where it ended up the next day, is that it leapt over the $8.50 all the way into the $9 range. And that kind of tells us something. That means that the market believes this deal isn't done yet. And they believe that there's more value to be given. And I'm kind of at a loss of words on that one, because I said that the value was going to go down over the next couple of years. And I thought it was. But what happened is when they went to the free model, they transferred from about 3.2 million to over 5 million members. So that tells me that they have more members to monetize, and that's why I think the price of $8.50 might be too low.
So what happens from here? I know it's got to go to the Angie's List shareholders, and from what you were telling me off camera, there are actually some law firms that have launched some investigations into this.
Yeah, there's some entities out there, 3 of them specifically so far, that have decided they feel that the board breached their fiduciary responsibility by accepting this offer, that they believe the offer could be a little higher. The market is kind of siding with them, which is why the price is above $9 a share. That is probably going to throw a little bit of a complication into this. It wouldn't surprise me if they come back with an enhanced offer, because when shareholders get involved and shareholders have more rights nowadays, they make changes.
Angie's List and HomeAdvisor had said this is likely going to close by the end of the year. They said maybe within 9 months. Do you still presume that'll be the case?
Oh, definitely. I mean, that's very possible. Even if there are lawsuits from shareholders, that's not going to stop the train from moving forward. It may just modify it as it goes along, but I think this deal will get done this year.
Angie's List has been such a prominent name in Indianapolis and in Indiana and really across the country. What do you think is next for the company? I mean, obviously it's very early, but what do you think becomes of Angie's List?
Well, the big question is what's going to happen to the employees. And Angie's List has a very good business model as far as acquiring customers and is working with the vendor. So I think that model is pretty good, and it wouldn't surprise me if HomeAdvisor says, you know what, we're going to move the operational headquarters to Indianapolis. I'm not saying they will, but it wouldn't surprise me because it's a very good operations on what they do here. Not profitable, but that's what the parent company is going to make them profitable.
Overall, do you see this, the whole Angie's List arc, and obviously there's more to be written, but do you see it as a positive, this whole story of Angie's List?
The folks who are going to lose their jobs, and there are going to be some job losses here, obviously it's not good for them. But for the company as a whole, it's a great thing because this company cannot sustain itself losing money, and there was no prospect of them ever becoming profitable. The whole game of e-commerce from a decade ago was how you're going to monetize it, and there are some companies that have begun to do that. And this was a good thing for Angie's List to exist and survive in the long term.
Well, a lot of the story still remains to be written. We look forward to seeing what happens in the coming weeks and months. Associate Professor of Finance Matt Will from the University of Indianapolis. Thanks for joining us in the new Studio I.
My pleasure.
Well, thanks for watching Inside Indiana Business on YouTube. For the latest statewide business news, be sure to visit InsideIndianaBusiness.com and subscribe to our free daily e-newsletters by clicking on the link.